Are you able to hear me, Heidi?
Yes.
All right, excellent. Well, let's get started. As any marketing professional knows, consumers buy based on their needs, not on the way providers organize their delivery of products and services. And the same is true for us in the legal profession. So to provide some context for Heidi's session today, let me start with a quick story. When I started my brand new job as Sidley Austin CMO, it didn't take me very long to figure out that the firm was organized around practices, the type of law lawyers practice, staffing and budgeting, continuing legal education, recruiting, and so forth. All of these were organized around these lawyers grouped by practice. And we called these groupings of lawyers PATs. That was short for practice area team. And each of these PATs had a PAT leader. And much of my marketing budget was allocated by these PATs and controlled by these PAT leaders. But I quickly learned things weren't so simple because many of our marketing initiatives were based on, you guessed it, the needs of buyers of legal services. And when you're pursuing sophisticators, buyers of legal services based upon their needs, you quickly realize that they're very different from industry to industry, but typically within an industry, they're actually very similar. So take a simple example of an industry conference. So our firm, we wanted to attend the conference and we want to represent the firm in order to meet potential clients at the conference. Well, rather than sending multiple PATs and each of these PAT leaders, paying to send a group, the PATs started to organically work together. And eventually that organic reorganization were formalized into what the firm started to call cross PATs. These are great internal names for things. But a cross PAT, which just kind of naturally evolved, is what Heidi is going to be talking about and referring to as a sector-based go-to-market approach. So my name is Barry Solomon. I'm with Litera, and we're happy you're joining us for this third and the final workshop webinar on different aspects of smarter collaboration. This one is about, as I mentioned, sector-based go-to-market approach. So as we begin the webinar, please send in any questions via the chat throughout. I'll take a look at them and interrupt Heidi to ask. And we're going to record the webinar and share it with all of you. Now, I first learned about Heidi Gardner when I was Sidley CMO. Her research about the value of collaboration within law firms helped motivate the type of change that these cross PATs were doing naturally, right? Lawyers needed to be encouraged to take time to learn more about each other, about our clients, and to develop the trust necessary for smart collaboration. So for me, it is really a privilege for the second time to be introducing Heidi to all of you. You may know her from her best-selling book, Smart Collaboration, How Professionals and Their Firms Succeed by Breaking Down Silos. I read that book many years ago, so I am very much looking forward to her new book, which I recommend to you. It's not quite out. It's a month away-ish, but it's available now for pre-order. That book is called Smarter Collaboration, a new approach to breaking down barriers and transforming work. And both are published by Harvard Business Press. Speaking of Harvard, Heidi is a distinguished fellow at Harvard Law School. She was a professor at Harvard Business School and is currently faculty chair and instructor of multiple education programs at both Harvard Law School and Business School, and she travels the world speaking to many law firms across the globe. She works at the intersection of the business and practice of law and has been recognized multiple times. My personal favorite, The Next Generation Business Guru by Thinkers 50. But I don't want to take any more of your time, Heidi, so please join me in virtually welcoming our speaker, Dr. Heidi K. Gardner. Heidi.
Fantastic, fantastic. Now, let me just ask, are you able to see the slides yet?
I'm able to see it, so I assume everyone is.
Okay, fantastic. It's always a bit touch and go when we are switching between so many platforms in a day. So yes, here are the two books that Barry just referenced. This one, yes, is available for pre-order, and it comes out exactly 2 weeks from today. So we are in the final round of encouraging people to get the pre-orders in. We're talking today about one particular chapter from this book, chapter 7. What we called collaborating through a sector lens. Now, you're going to hear me use the word sector and industry interchangeably. What we mean by that is if you asked your client, what do you do for a living? A lot of people identify with the industry they work in. I'm in tech. I'm a banker. I'm in healthcare. It's that level that we're talking about, and it matters to people because so many individuals grow up in a sector, they grow up in an industry, they become passionate about it, they become incredibly well networked, they develop the reputation in that industry. And unless we're going to them and engaging with them in the primary lens that they see their work through, it's really hard to do anything except come across as a generic lawyer, a generic marketer, a generic fill in the blank, right? And so what we hear again and again across corporate legal departments, general counsel, other consumers of the kinds of expertise that your firms excel in is this. So one of the chief legal officers gave us this quote, and I think it's worth digging into because we think it's so emblematic of how buyers of legal services are thinking these days. He said, just being a strong legal technician no longer cuts it. And being responsive is client service 101. No gold star for that either. So let's just pause here for a minute. Do any of the partners in your firm talk about what makes them different as being highly responsive to clients? I mean, cut me a break, as if your competitors don't actually answer the phone or respond to emails. You cannot, as this CLO is saying, you cannot differentiate yourself merely by being responsive. That's like a bare minimum standard. Now, he goes on to say something a bit provocative. He says, I expect my advisors to have a deep grasp of my business and how the industry dynamics do and will affect us. So let's unpack this for a minute. Expect, his second word in this paragraph, I expect my advisors, not, oh, it would be nice, or occasionally I look for, I expect. So the deep grasp of my business means a partner who's serving any client is expected to know not just the legal answer, but to contextualize that in somebody's business. Here's the legal answer. Here's why we think it's right for you, because your corporate strategy is this and this and this. We considered these other options, we ruled them out, and our recommendation is this. That's what it means to have a strong grasp of the business, the ability to make a recommendation, have a point of view, and not just lay out some options. These people have to realize you're not in law school anymore. You don't get an A+ for examining every option to its full extent and citing, the underlying theory. The chief legal officer, the GCs, they want to know what your partner believes. What do they recommend? Now, here's where it gets dicey though, right? I want to know how the industry dynamics affect us. So you don't just have to know my business, you have to tell me your firm is probably serving 3 of my either direct competitors or those in my ecosystem. What are they doing different from us? How are they getting ahead? Where are their risks? How have they overcome it? Right? And this is the toughest part. How is that going to affect us going forward? This, you might say, is unreasonable. Nobody's got a crystal ball. But if your partners are working together, and perhaps even more importantly, if they're working hand in glove with the business development function and some of your research folks, they will have an informed point of view. What does it take to get there? So in wrapping up this quote, he said, bring me insights, help me see around corners. how, like if I were to ask you, we're not going to run this poll, we'll run a poll in a second, but if I were to ask you in a poll, how confident are you that partners in your firm can consistently deliver on these expectations? What would you say? 90% and above? Yep, absolutely. You might miss occasionally, but we're really consistent, really strong. Or is it more like 50-50? Kind of depends which partner you get. Or is it, oof, we've only got a handful of partners who really operate at this level? Let's be honest. A lot of firms are closer to that side than they are to the 90%. Now, I have the privilege, me personally, I have the privilege of working not just in the legal sector, but across the professions. So in one geography, in one area or another, I've worked very recently with all 4 of the big 4 accounting firms, for example. I guarantee you that the PwCs of the world are closer, maybe not to 90%, but closer to it than any average law firm is. Likewise, we work with the consulting firms. My background is at McKinsey, and I spent 5 years at McKinsey, not a lifetime, but half a decade. And while I was there, we underwent a transition where people who had been aligned to practice groups, right? I was a strategy consultant, an organization consultant, a marketing expert, people who were aligned by disciplines and knowledge bases were expected to set that aside and declare a major and potentially a minor in an industry. So somebody who was a marketing expert may have declared a major in consumer products and a minor in the automotive industry. Real example, right? Now, I don't think that most law firms, are going to get to the point where they're asking their partners to abandon a practice group. I wouldn't even recommend that. But what I would say is there are professional services firms out there, professionals out there who for way more than a decade have been thinking along the lines of their clients' industry. These firms have poured enormous effort into aligning their people and equipping their people, partners and a whole range of other people to go out and address the market. They are able to not just understand industry dynamics, but predict how those industry dynamics are going to affect their clients. What's it mean for ESG trends in the energy sector? Well, I can tell you, institutional investors, when they're looking at the energy sector, are making some significant changes. Take a look at what happened with governance in some of the major oil companies. If your partners don't have that point of view and they're serving energy companies, wow, they're missing out. What they're missing out on is the ability to equip people like this, the guy who gave us this quote. They're missing out on the ability to provide him and his counterparts insights, the ability to see around corners. I mean, what do we mean by insights? What does it really take to drive that? Well, knowledge is important. People need to understand their industry. They need to know a lot of the basics. They need to be, say, reading what it is that their main client reads as well. And there was a great example in my first book of a lawyer, a partner in an international law firm. He was based, I believe, in Hong Kong, and he was an IP lawyer. But he had a real passion for fashion, and he started his firm's luxury goods practice. And he said, my doorman kind of looked at me funny, but I started subscribing to Women's Wear Daily. He said, that's what my clients in luxury goods and fashion were reading. He said, it was enormous benefit for me because I could speak their language. I knew what the trends were. I even knew the gossip, right? So he knew some of the knowledge, and he was able to provide advice based on that. That's what I was just talking about. It's not just knowing something, it's developing a point of view and a set of informed recommendations where you rule some things out that have been considered and you're zeroing in. Now, that's kind of the next step up. Insight is beyond that. Insight goes even a step further. Insight is when you are able to take this advice. Everyone since the 1990s, when David Maister wrote his book on the trusted advisor, everyone wants to be able to take advice and become that trusted advisor. Insight is the new game, and insight's the new advice, except that it takes a team. It is not enough for that one single trusted advisor to be an individual hero. They've got to be teaming up. They've got to be working with their fellow partners to say, hey, what have you heard in the luxury goods industry? What have you heard in the energy industry, in tech, in life sciences? You know, we've got all of these eyes and ears out in the market. What are we learning? How are we coming together to generate some insight about what that's going to mean in the future? Now, you can have partners sit in a dark room and think big thoughts all by themselves, but they're probably going to land somewhere in between knowledge and advice. Getting them to team up together, and ideally to be equipped with data and perspectives and some thought-provoking questions, ideally some support for developing thought leadership in that arena. People in marketing and business development and the research side have to be supporting this initiative, because I don't think there's a partner out there who on their own has the time to devote to creating genuine insights. Barry, I'm gonna just pause for a second here and see if there is any questions or concerns with anyone at this point.
No one has typed in a question. I do think that this idea of the difference between going from an individual providing advice and having a team, I'm wondering, in your travels, have you seen examples, best practices, or ways of firms kind of making that shift? I mean, my observation is sometimes lawyers take pride in their individual ability to be that go-to person, and so there's very often a need to encourage them. And I'm just wondering if you've seen strategies for helping encourage that behavior.
Yeah, absolutely. So we're going to get into the how-tos just now. I think it starts with creating a real strategy around this. Because Barry, nobody can go out and do all of this by themselves, and they have to understand, number one, that it's an enormous priority for their clients. They have to truly believe that. On that note, if somebody is saying, nah, I'm a litigator, a courtroom's a courtroom, I can do what I do, completely industry agnostic, I hate to say it, but that's kind of old-fashioned lawyering, right?
Mm-hmm.
There has got to be a different litigation strategy for a high-tech company versus a old big box retailer. I mean, really, you're completely agnostic as to what the industry is. Those two different profiles of industries, they don't have different risk appetites. They don't have different shareholder and stakeholder expectations. What about the institutional investors anticipating from this kind of litigation? What precedent will it set for the rest of the industry? If you are telling me that your clients don't care whether you know their industry or not, my rebuttal is you just don't know your clients well enough. And people hate me for saying that, right? But I think it's true. Any sophisticated buyer of legal services who isn't talking to their external counsel about the industry trends means they're either not going to have their position of influence for very long as a general counsel, for example, or it means that this partner isn't aware of it because that GC is talking to somebody else about it.
I think most of the partners that I've interacted with in my career, they get that. At least the successful ones do. The interesting difference here is the notion that to really scratch that itch for a sophisticated buyer of legal services, it's not enough for that individual partner to go with advice, but it takes a team. And I'm trying to understand, okay, do clients articulate that? Do you hear that? Where does that come from? That the fact that hey, it's no longer enough for the sole partner if you really want to go beyond advice into insight.
So I'd have two things to say about that. One is I'd encourage law firm partners to go on the website of EY, and take a look at the thought leadership that one of those kinds of firms, or a McKinsey, or a
Hmm.
BCG or Bain, what kinds of thought leadership do they provide on a very regular basis about an industry? Now, somebody could argue, oh, but they're behemoths. Of course, they can throw resources behind it. Yes, acknowledged, but it is a machine in those firms, in those consulting firms, in those accounting firms. There's an absolute machine there geared up to extracting what people on the front lines of client service are understanding, what they're developing, and then turning that into these sorts of insights. Right? And so no brilliant cyber consultant is out there on their own trying to predict what's going to happen differently in cyber for healthcare versus cyber for a retailer.
Yep.
Right? They've got a team behind them, and that's how they're able to engage so deeply with these industry trends. I mean, the other thing I would say is clients shouldn't have to ask for
Yep.
it. Right? Clients shouldn't have to ask neither for industry customized, industry tailored advice and insights, nor should they have to ask their partners to team up to do it. Right? I mean, think about completely different setting. You walk into a restaurant, you sit down, you ask the waiter what's the special of the day. Right? The waiter hasn't created that special. The waiter hasn't even, scripted probably what they're about to say and so forth, but you expect that waiter to know. And if you order the special, you expect that it's going to be delivered and it's going to be delicious and it's going to be delivered with the rest of the meals and so forth. There's a whole team in the kitchen and everywhere else that's put that meal together, and you shouldn't have to ask that waiter to team up and make sure you get a delicious meal,
Yeah.
right? I mean, so why would we put the onus on law firm clients to ask for behind the scenes collaboration to generate the insights?
Yeah, actually, as you were describing that, I was thinking back to the quote that you gave from that, I think it was an executive of a Fortune 50 company with this expectation, right? And the worst thing is it's great if a client tells you, but you're right, they often won't. But trying to discern what they expect, and what was very helpful about what you just talked about is they're not just getting legal services, they're getting consulting services in a number of different ways. They have financial advisors, they've got, as you were describing, cybersecurity. And if these other professional services firms take that type of team approach, then the bar is raised, right? And law firms are going to have to follow suit, or else they'll be left behind.
Yeah, I mean, and what's only fair is to equip your client with the same kinds of insights that her functional counterparts have, right?
Yes,
Because the CFO is walking into the C-suite having been equipped by Deloitte or KPMG with the industry trends.
right,
Your head of strategy is walking in, or your COO is walking in having been equipped by the Bains of the world with
sure.
all of this. And the GC walks in, and who's taking care of them? Who's making them look smart and forward thinking, right? Whoever manages to do that starts to gain a higher status in the minds of their clients than somebody who's coming in with that technical legal answer. So, a lot of this starts with an understanding of what it is that the clients want. What do they expect? What would delight them? What would differentiate us from the competition? But let's get into some of the how-tos. As I mentioned before, what this will take is really developing and honing a sector-based strategy. So, Barry, you've got my slides up again on the screen.
Yep, see them fine.
Fantastic. 'Cause I'm asking you because I don't actually see what you're seeing. So as we're going through here, what we really mean, start with the strategy, analyze and prioritize the most lucrative client segments. And so this requires a number of different ways to go about, how are you making the difference? Are you going to look at size versus growth? Because there's a lot of law firms that we work with, and they'll say something like, well, our biggest sector is, I don't know, banking. Okay, that's today's biggest sector for you. Do you want to look at today's biggest sector that you're presently serving, or do you want to look at the fastest growing sector that you might get a toehold in? One is not better than the other. You know, I might have privileged one in the way I'm saying it right now, but you need to make a strategic choice about resource allocation and focus. You've also got to look at your will to win. Right, in the book we unpack what this really means, but having a very objective, sort of cold-eyed view of what it would really take to differentiate yourself in the tech sector. Like, are you going to go head to head with some of the firms that have had, you know, a decade plus experience, the ones that have grown up with the Metas of the world, the ones that, you know, IPO'd some of the tech companies that are now household names? Can you go head to head with them? Are you willing to make the investments? Are you going to try to hire some laterals away from them? Are you willing to open offices in the places where, you know, those organizations have their headquarters? A will to win has to be far more than a couple of partners who are keen, right? It has to be an institutional commitment to make investments over a sustained period of time, even when you're not getting short-term results. So do you have the will to win in a given sector? What are those competitive dynamics? Not just who's serving those clients right now, but who might be. So let me give you an example. We were talking to, I don't think I can name the company. It's one of the world's biggest tech companies. And I was talking to one of the primary buyers of legal services. And that individual said that they are very actively shifting away from law firm providers to, guess what, technology solutions. What this individual was explaining, Barry, is that her world works on hyperdrive, right? She will get a call from, you know, the business. Her team will get asked a question with the expectation that they will provide a recommendation within an hour. Wow, like some of these are tough questions. You've got, you know, starting now, you've got less than 60 minutes to give me a recommendation, not a legal analysis of everything we could do, but which one of those things should we do? And so she's relying on technology and different tech solutions to be able to massively speed up what it takes to cut through some of the different options and zero in so that they're then looking at, you know, red versus green as opposed to all the colors in the rainbow. And if the law firms are going to keep up with that and say, we really want to be serving the tech sector, we really want to be in high tech, are law firms going to make those investments? Are they going to partner with some of the tech providers who are doing this? Are they going to try to develop that in-house? Are they going to come up with some other kind of process innovations so that they can turn around a recommendation in 45 minutes so that this, you know, legal buyer has something in 60 minutes to go back to the business with? I don't know that a lot of law firms are thinking in those terms right now. You know, and you introduced me as somebody who's kind of at the intersection of the practice of law and the business of law. And you're absolutely right, Barry. We need to be thinking, not just thinking like lawyers and, you know, covering every base to the nth degree and making sure we've documented it in a long memo. It just doesn't cut it for some clients, right? And knowing the risk profile of any given company, it has to be put in the context of the risk profiles of their competitors in that industry and what the expectations are. So again, let me just pause there. Barry, what are your reactions to this?
Yeah, I mean, I do believe that law firms need to, and we're starting to see them move beyond thinking just as lawyers. Although, you know, a lot of lawyers, they entered the legal profession because it's a profession. And
Yeah.
so I think that the perspective that you're bringing, which is not comparing what lawyers do to other industries, but rather to other professions, and to realize that, there is a lot that lawyers can do that are, as you say, putting yourself in the shoes of the client and realizing. I mean, I remember doing a deal years ago where one of the lawyers, they made a change to an agreement in the 11th hour and pulled out a section. And the lawyer took over an hour going through and renumbering everything instead of just saying, intentionally removed. And the
Right.
client was like, you're trying to make this perfect from a lawyer's perspective instead of putting yourself in my shoes. And I remember this client just saying, think about it from what I want. And you were talking about, responding in an hour. This is really difficult for lawyers. They want to make sure they are thorough, and it's uncomfortable.
Yeah, and I mean, if it weren't uncomfortable, if it came naturally to everyone, we wouldn't be having this conversation, Barry, right?
Yeah.
It would be, it would have happened, you said organically at Sidley. Yeah, I think there are some people for whom this comes quite naturally, oftentimes people who have a passion for the industry,
Hmm.
right? There was an individual, I can say it because we wrote and published a case study at Harvard Law School that I wrote about Oric, right? So there's a lawyer at Oric who's in the automotive industry and says, I'm a gearhead. She said, I went to law school so that I could buy better cars. So she's passionate about automotive. And for her, that's totally natural then to specialize in the automotive industry and so forth. But not every lawyer has a passion for a particular industry. And what we're talking about here is the ability to transition from being a subject matter expert to a subject matter expert who puts that to use in practicing for a particular kind of industry. And I'm guessing, Barry, that not every firm in attendance right now is big enough such that everyone could focus exclusively in one sector. And in fact, even if you have the ability to do that, I'm not sure I'd recommend it. Even as I was saying at McKinsey, we had a major and a minor. It's because it's really important to get people thinking across industries and not having a silo of an industry. And what we can do, though, is create the circumstances where people are better equipped and more motivated to engage in this way. And it's why a strategy is so absolutely crucial. I mean, here's one way to think about it. Asking people to prioritize which sector they're going to go after. One axis, you think about how much value is there in this particular sector? Is it going to be more valuable to us as a practicing lawyer, as an office, as a firm, to go after this or that sector? And then how likely are we to capture it? Clearly, if there are difficult sectors to capture and is low value, well, rule those out immediately. They probably wouldn't even jump to mind. If there are ones that are easy-ish, nothing's easy to do, but if you've got a range of factors that make this easier to capture, those would be things like, do you already have a significant reputation in this sector? Do you have a number of individuals who themselves are seen as, gurus of this sector, or at least as highly knowledgeable? Do you have a history of serving this sector? Do you have offices in the right location so that if there are hubs of, biotech in Boston, have you got a Boston office? If you want to serve energy, you might want to have a Houston office. Silicon Valley for tech, right? And so do you have geographic presence in those places that's going to make it easier to capture? And the ones that are easier to capture, that are higher value, those are absolutely the ones that people should count on the firm putting resources behind. So, we will we will distribute rather a whole set of these slides, and it lays out some of these ideas. What does it take to assess the value? What makes it easier or harder to capture? But we want people to think about developing a strategy, not just an ad hoc something that emerges. Hey, look, we've got a bunch of people interested in retail. You want to have a strategy because partners are more likely to be motivated to go after an opportunity if they're convinced, number one, that the firm will adequately recognize and reward their efforts, and two, put the money and other kinds of resource behind it.
Heidi, it's interesting. You earlier were talking about looking at it through the lens of sectors versus the lens of practices. And as I was looking at that chart where you said, you know, a lot of firms, because they're organized by practice, they may by accident end up with a lot of experience in an area. And until somebody does the hard work of analyzing the data and then connecting the dots and realizing, you know, hey, they've done a lot. And then, you know, that little trophy you have at the right, it may be if you could change your lens and say, I'm not going to look at it by what was the primary practice we were doing, but let's look at it through the lens of what was the sector. I may be able to identify areas where, hey, wait, our firm, if we would just bring these people together, actually has this competitive differentiator. And, you know, and then you start to be able to provide more than just advice because I'm in my silo, but go on to the insights that you would get when you would have a litigator and a transaction lawyer and a real estate lawyer all working together because they're kind of looking at different problems from with this new lens, as you said. So I think it's fascinating.
Barry, you know, one of the problems that we see in a lot of law firms is they don't even capture the data adequately to be able to crunch it that way,
Mm-hmm.
right? And so, you know, start by assigning SEC codes to your data, right? So don't just tell me you serve Pfizer. Make sure that Pfizer is tagged as a life sciences or a pharma company, right?
Mm-hmm.
And make sure that every client over, at least over a certain size, is tagged with an industry. Now, you will get into fights about this, right? First of all, because it's boring and nobody wants to do it, but also because you look at AIG. Are they an insurance company or an asset manager? Oh, right. You know, so who owns them? And you know, you get into all sorts of fights like that. I mean, what is Amazon? It's not a bookstore anymore, right? AWS. You know, how do you categorize that as part of Amazon? So you have some real decision points, some real judgment that you need to apply, but start with SEC codes. It gets you 80% of the way there. And then do exactly what you're saying. Crunch the data and find out if you're actually having a de facto industry group that just hasn't been connected together because you're serving this kind, you know, you're serving pharma clients, but you know, on the class action side for this group of clients and on the IP side for this group of clients. And you didn't even know until there was a conflict check that you were serving so many clients in that industry. And somebody's got to do that work. And the reason it's important to have a strategy to state perhaps the obvious is that people need to focus. Right? People cannot be doing everything. If you diffuse your marketing dollars, if you diffuse people's time and attention, if you diffuse your thought leadership creation efforts across a whole range of industries, you're going to make precisely zero impact. Maybe not zero, but like 1 out of 100, right? And so you need to focus and figure out where to say yes and what to say no to. Because there could be some juicy industry conference and somebody comes along and says, well, I serve 6 clients in that industry, give me the marketing dollars and we'll sponsor the conference. But if you don't have a sector effort behind it, that's just wasted money, right? It might be one individual, but what are you trying to do? You know, prop up that one individual so they become a better star on the external talent market? I'm not sure that's exactly in the firm's best interest.
Yeah, so we used to call random acts of marketing, you know, without a strategy, right? But
yeah, completely, right? So, you know, getting coordinated here requires making decisions. And frankly, it requires a lot of backbone because you're going to end up saying no to certain partners. And don't put that on the job of the marketing team to have to make those decisions. You know, put some thought, some effort, some money behind your strategy, define what your priority sectors are, and then everyone is, singing from the same song sheet, right?
I
So
have a quick question for you.
yeah,
When you were talking about, here's the key things you need to do to really to go about it. One of the points you made is, I forget the word you used, but it's kind of the stick to it. It takes time. You have to realize you may not get immediate results. My question is have you been able to observe yet how long this takes? I mean, what type of investment should a firm be making in terms of time? Because I know that there's different ways of measuring things, but do you have any observation or insight into that?
yes. Oh, you want me to elaborate? Oh, fine.
Yeah, please. Yeah, you can just say yes or no.
Uh, I'm joking. Yes, absolutely. So, we've worked with firms that can document serious outcomes within a year.
Okay.
Um, and you're not gonna move mountains. You're not gonna turn around an ailing practice group in that amount of time. In fact, I'd suggest that maybe you don't even want to turn around an ailing practice group. You want to make a different decision about it. But what you can see unequivocally is that if people are dedicated to this effort, if you put the right strategy behind it and you pick the right sector, you get the right leader on board, you put some of the structures and processes in place that allocate not just lawyer time, but professional time for things like marketing support, business development support, some of the research that goes into it to develop the thought leadership. If those go behind it, and here's the critical piece, people are jointly accountable for the success of the sector, not for originating new clients, not for individually increasing the size of a client in that sector, but responsible jointly for the success of the sector, measured by growth across the sector, by broadened and deepened client relationships so that there are more institutionalized relationships there, by recognition in the outside world that you're developing a reputation for your knowledge and thought leadership there, ideally by client satisfaction scores moving in that direction. If people feel mutually, if there's a clear enough band of people who feel mutually accountable for the success of the sector effort, that makes a big difference, right? And what we've seen is that sector groups that become successful in those different ways, they have indicators of performance along the lines I just mentioned. Those that are successful are quicker out of the gates in terms of moving from internal work, developing that strategy, picking the right leaders, deciding who's going to do what and how to coordinate themselves. Those are all crucial pieces of work, but they should be done in a really snappy, highly professional, rigorous, robust way, but they should be done fast. Otherwise, people lose focus and they lose faith. And so getting people through those kind of startup activities and the investment period such that they can then go out to the market much faster, that makes an enormous difference, not only because you start to see results sooner, but you're building a much stronger foundation of people who are committed to this effort. You've essentially created your own proof of concept, and it's much easier then to generate additional momentum and sustain it than it is to have the kind of ebbs and flows where there's a sector group that tries to get off the ground. They spend so much time navel gazing that then people lose interest. And then you've got to gear it up again for another one. And then that roller coaster pattern is pretty much the kiss of death for sustaining momentum.
How you talked a little bit about aligning accountability and compensation. How have you ever seen that work? I know a lot of firms have, origination is really critical. Do they shift to a different way? Do they create a hybrid? How have you seen that actually work?
Yeah, I mean, Barry, I don't want to over-index on comp, right? So we use, so adapted from, a book 20 years ago that's still as relevant as ever, a framework around what it takes to have an aligned organization behind a particular strategy. So we started by talking about the strategy. What sectors will you and won't you play in, or at least will you not invest in? And then what are the kinds of structures that are immediately supportive of that? And comp is one of them. But you also have to think about these other areas, and I'll come back to your question specifically on comp. But let's make sure we've got the other pieces of the puzzle in place, right? There's the practice group coverage. There is the geographic coverage. Do you have the right org design in order to tackle the strategy, the strategic choices that you've made? Do you have the right people, right? Some of it is around lateral hiring. Do you actually have people who are recognized experts, or who you can grow quickly into recognized experts? Performance management and rewards are part of that people system. You've got to have the business support here, knowledge, marketing, BD, who are geared up and, let me be clear, respected by the partners. If you have a bunch of partners who look down their noses and think that people who are trying to support them are second-class citizens, you've got the wrong partners in place, or you've got the wrong business support professionals in place. But either way, you cannot have a caste system or a class structure where some people are more important than others. If you go into a McKinsey, I'm working with McKinsey right now. I'm not sure if I'm supposed to say that or not, but I'm working with McKinsey right now, and we are working to make sure that the people who are not client-facing are incredibly well equipped to engage in these kinds of forward-thinking, robust actions that will make McKinsey's client service even greater than it's ever been, right? And partners and other consultants, client-facing individuals appreciate fully that they could not be doing their job at the tip of the spear if there wasn't, the whole organization behind them. There's enormous respect across the organization for people in these different roles. And we need to see that in law firms as well. So the biz support has to be, up to standard, and people have to recognize them for the critical, not nice to have, but critical role that they play. And then you need things like data and analytics. We talked about data quality before, and the technology to support it, and the budget, and so forth. So there's a lot. Comp is one piece of this puzzle, but it's really only one piece of the supporting structures that need to be in place. And each of those pieces has to be reinforcing the strategy and helping the firm and the partners and the other lawyers deliver that strategy. So Barry, if I can come back, your question was, what are some of the changes that firms need to make to their comp system in order to make this successful? One of the pieces that firms need to put in place is a specific set of expectations, like a business plan for the sector, individuals who are held accountable for delivering on those aims, and a recognition and reward system such that they will get quote unquote credit for the success of the sector, right? Any law firm that over relies on origination is pretty old-fashioned at this point. Unless they've got a more evolved origination system where entire teams of people can receive due credit for the effort that they've put in generating that. But Barry, if I look at what you're trying to do in a sector effort, you're trying to take ideally existing clients, right? That makes, you start with a sector, you choose a sector because you've already got a strong understanding of clients in that particular industry, reputation, relationships, etc. So you've got a strong basis to begin with. The objective is not to get 6 more or 18 more of the other companies in that industry. It's to take the relationships you've got and broaden and deepen them based on these insights, right? taking what you know about the utility sector and using that to equip your clients to be more forward thinking, to succeed as individuals and as entities in the space that they play in, connecting them in the whole ecosystem so that you're using your convening power as a law firm to promote the network of different kinds of players and positioning yourself as an authority who understands different pieces of that sector. That will allow a law firm to gain not just more trust, but also more work, and more sophisticated work, more complex work, more lucrative work. Ideally, a law firm that has a great sector go-to-market approach is going to find themselves in a position where they get more and more sole-sourced work. In other words, getting work from existing clients that never even went to RFP, right?
Mm-hmm.
And the reason a partner will be able to do that is because their general counsel says, hey, Jane or Joe or, this team of these individuals from this firm, they know us so well, right? They know our business, they know the industry dynamics, they can make, excellent proactive predictions about what that means for us. We couldn't possibly go somewhere else for this really important piece of work because there's no other firm that knows us as well. Right? That is the goal in trying to develop a sector-based go-to-market approach, is that your partners, your lawyers, and potentially some of your other folks who are in operations, et cetera, will jointly understand that sector so well that they're creating value just by being there, and they're practically irreplaceable.
So you've talked a lot about what firms should be doing. I'm wondering if you can describe, I think increasingly firms realize that they need to go down this path. I mean, that's my observation. But I think not every firm is successful. I mean, can you describe any observations of where people have gone in the wrong path, taken the wrong approach? I mean, what is the what to avoid if I'm enthusiastic about doing this?
Yeah, absolutely. So I'm going to jump ahead in my slides here, but one, the foundational element to having an aligned organization that's truly going to drive a sector strategy towards success is truly authentic leadership. And so let me answer your question kind of in the inverse. Firms that don't do this, these three bullets,
Yep.
are unlikely to succeed sustainably. You really need a senior champion with a consistent narrative. I mentioned Oric previously. I wrote a case study on them. Mitch, the chair of Oric, has dedicated enormous amounts of time and effort articulating why it is that a sector-based approach is beneficial for Oric's clients, right? Having somebody in a firm who can make the case consistently why not only a sector-based approach is important, but why these particular sectors matter for us and how we're going to win that way, hugely important, right? Also having a motivated and capable group of sector leaders. Now, we often find that somebody becomes almost a self-appointed sector head. And this really happens when you have this emergent sector. Oh, look, we're already serving 6 companies in the whatever industry. Hey, I think we have a sector. Oftentimes what you find is that the individual who self-appoints or just de facto becomes the sector group leader is somebody who really knows the sector, might even be passionate about it, but couldn't lead their way out of a paper bag, right? I mean, they don't have the skill or even the desire to do the leadership activities to motivate a whole bunch of other people and help them see the light and resolve some of the conflicts and the interpersonal tensions about how we're going to go after this and make the tough calls about an investment here but not here. That's what a real leader does, and creating followership is not in everyone's DNA. And so, ideally you're going to have people who are both highly reputable and skilled and knowledgeable about this industry and brilliant leaders. And if you don't have that basket of skills in the same person, then you need to be thinking about pairing people up as sector co-heads so that you get the full group of skills and motivation in a pair of people rather than an individual. And then lastly, I'll say that it requires to really get a sector group not just moving but sustained and successful over time. You need leadership embedded at all levels. It can't just be people with titles. And I think this is a mistake, Barry, that a lot of firms make. They don't really genuinely empower people to go after a sector in the way clients would expect them to do. And across law firms, maybe I'll just, in wrapping up, say this again and again. What I observe in the legal industry is that associates and senior associates are the most under-leveraged resource in the professional world. And I don't mean leverage in terms of, the hours and utilization. I mean leveraged in terms of their brain and their abilities. By the time somebody at a McKinsey or a Bain reaches that pre-partner level, they're basically operating like a partner, right? They have been mentored and coached and developed in ways that they are, fully capable and highly, highly motivated to engage with clients at the most strategic levels. They're, interested in getting into the C-suite. They speak the language. They spend their time reading and writing about trends. Those are the kinds of things that I don't see happening enough in law firms, right? Let's make sure that every partner believes that a big part of their job is creating that next generation, the deep, deep bench. And frankly, I see too many law firms where not even the junior partners feel empowered to do that. And so it's a huge mistake for law firms to say that they're invested in generating a robust sector-based go-to-market strategy and not putting the development behind people and the resources and the systems behind people that really equips and empowers them to deliver it.
Well, this brings us to the end, Heidi. I mean, as always, it is so fun to hear from you. It's very motivating for me because it's like you're describing such an opportunity within law firms. And, I think in 5 or 10 years, we're going to look back and realize this was a pivotal moment. And I think a lot of firms are seeing that. And it's kind of interesting because, I'm happy that Litera is going to be sponsoring this new research that you're doing, sending a survey out to get more research-based insights into this whole area of how long have law firms been doing this, what's working, what's not, and so forth. So we'll be watching with interest in the first quarter of next year when you summarize those results.
Absolutely. Looking forward to working with you more on that, Barry. I think developing this research-based and a benchmarking study is going to be really beneficial for firms so they can understand where they are and where some of the gaps are and how to get there.
Yeah, so thank you, Heidi, and thank you, everyone, for joining us on this last of our Smart Collaboration series. We'll be sending out the recording of both this session and the prior two in this series. So goodbye, all.
Thanks, everyone.